Ilian Mihov, Professor of Economics at INSEAD. Thanks for joining us on INSEAD Knowledge.
Thank you.
You've been talking here at the Leadership Summit in Asia about the financial crisis. We've just had the election in the US. Where do you think we go from here? Do you think that the new administration can bring in measures that will help alleviate the situation?
Absolutely. I think that at this point, the issue is that the financial turmoil has moved to the real side of the economy. And we have seen already signs in September, in October, that manufacturing is slowing down or has negative growth rates even. And at this point, whenever you see a decline in demand, then the best thing to do is to implement policies that will stimulate demand, and such policies would include tax cuts and increases in government spending. I think that the platform on which Obama was running includes both tax cuts and increases in government spending. If the change is powerful, aggressive, very determined, then I think that the US economy can start recovering by the middle of next year easily with with a very strong package. It remains to be seen whether the Congress will approve this package, because as we saw in the bailout discussions, sometimes politicians deviate in the wrong direction instead of being focused on the fact that the faster you do this, the smaller will be the damages.
But it's still going to be a couple of months before the new president is sworn in. There is a time lag, effectively, that we've still got the Bush administration and the transitional administration.
That's true. In fact, this is a very serious issue. Sometimes people think that, 2 months, what's so much about this? But in fact, if you look at the transition in 1932-33, Roosevelt was elected in November, but somehow he stepped into the White House in the beginning of March. So there was a big gap. The biggest banking panic in the United States, with the biggest decline in bank assets and closing of banks, occurred in January 1933, exactly during the transition time when the outgoing president didn't have much of an incentive to do anything, and the incoming president didn't have the power to do much. So I think that in this case, if the government, the politicians recognize the severity of the problem and the fact that the longer they wait, the more difficult it will become, then it might be possible to start at least discussing, debating, proposing these measures. I think that will be the best outcome. I mean, not in the Congress, but in the open area. This is what we want to do, this is how we're going, because you have to be very determined.
We've seen a lot of central banks making significant cuts to interest rates, and there's not so much room now for the Fed to move as it's heading towards zero in almost the same way that the Japanese central bank did.
Yes, but there is a big difference between Japan and the US Fed. And as I said at the summit, Ben Bernanke wrote one of the most insightful and informative articles on the problems in Japan. And what he recommended there was that you don't have to stop just by lowering interest rates. You can provide liquidity in other ways. And indeed, the current Fed has done more unorthodox changes than any other Fed had ever done or any other person had ever thought were possible. And I think, in my view, the most important change that they did, they started to buy commercial paper from companies. So companies now that cannot get credit from commercial banks can get credit from the central bank. That is unprecedented. That's something that nobody could imagine would happen. And at the same time, this is a way of minimizing the impact of the credit crunch. And I think at less than 10 days, the credit has ballooned to $240 or $50 billion. So I think that just lowering interest rates is, of course, it's necessary, but this does not exhaust all of the possibilities that the Fed has in order to stop the deterioration in demand.
Is deflation one of the major concerns now?
I think that that's a serious concern. I think that it is possible to start getting deflation. Deflation occurs when the money supply, when we don't have enough liquidity in circulation. And if you look at the data, the Fed has been pumping liquidity in terms of not so much even currency in circulation, but in terms of reserves, giving reserves to banks. And the balance sheet of the Fed has ballooned from 890 billion last year to 2 trillion this year. So it has doubled, literally. But then if you look at M1, M2, broader measures of money, the money that actually we use in transactions. Very few people go to a store with cash. They usually buy with credit card, with a check, with some other means of payment. And these aggregates are going down. At least in a couple of months, they actually went down, which means that money is shrinking, even though we try to expand the base. But since the banks are not lending, not giving credit, not giving credit cards, the overall purchasing power of the population is shrinking. And from there, you go to deflation. I think that the Fed, with all the measures, will be able to counter the deflation. And I think they'll increase liquidity as necessary just to counteract these dynamics.
So essentially, you would say that we will see what Ben Bernanke advocated with Japan in terms of expansionary policies.
Yes, absolutely. I think that we see exactly his recommendation to what were the problems in Japan. His recommendations are seen today, implemented in the United States. One of the arguments in that article was that when an economy is in a recession, in a slowdown, when demand is so low, it's a little bit strange to see a currency appreciating. And yet we see the dollar appreciating, which signifies that there are too few dollars out there for this state of the economy now. So I think that that's more or less the script that they are following, with a lot of other innovations along the way. I think that the best thing about the current Fed is that they're willing to consider every option if it makes sense and doesn't jeopardize the stability in the economy.
Ilian Mihov, thanks for joining us on INSEAD Knowledge.
Thank you.